Jared, could you please switch on your mic?
Hi, Costa.
Hi, Jared. How are you doing?
Doing well. Yourself?
Good, good. It's a nice room you're in. So we have a good connection. We have David and Gerald here online. I think it's the right time to go live and to kick off our webinar. My name is Costa Diu. I'm very keen to launch fintech businesses, fintech projects. I advise startups and also doing many attractive things within the fintech. Today, I'm holding this webinar with Gerald Antwi, who is an expert within the financial area. He's experienced from the Middle East and Africa as well. Also, we have David Parker, who is a fintech advisor based here in the UK. Today, we will talk about the bank of the future and how it should like we have a list of attractive topics to discuss. Thank you very much for those people I know and who are attending this webinar and the rest of people who decided to join us. I hope all of you guys will enjoy today's talk. As the next point, I believe that our speakers will introduce themselves much better than I can do it. Could you please, David, introduce yourself, tell to the audience about your traction, your history, your experience, and what led you to the fintech world?
Of course. Welcome, everyone. As Costa says, my name is David Parker. I'm the CEO of a company called Polymath Consulting, and we do a lot of work around cards and payments, mainly around Europe, Africa, and the Middle East. As I sit here today, I'm probably the real outsider. I've never worked for a bank, for a processor, a scheme, program manager. In fact, no one really in financial services. My background originally is in advertising and marketing. So I start off with companies like Saatchi and Saatchi, and it means that I come at things, I think, with a slightly left of field viewpoint in terms of actually looking at things and saying, does a customer want it, need it, and will they use it? These days, since about 2005, Polymath Consulting has specialized in emerging payments and e-money, as well as I sit on the board or advise a range of companies such as Cybertonica, Itemized, Journalink, and others such as 3S Money, Consentus, Swiper, and Trezio. So a whole range of different companies, about 14 in total. I think for this conversation, there's a couple of things that come interestingly into this. One is, I think, is open banking and open finance, and what impact that's going to have when we talk about the bank of the future, and the roles of banks as well in that. And secondly, as I said, is actually what does the customer want and what does the customer need? So with that, I'll hand back to Gerald maybe to introduce himself.
Thank you, Parker. So, like Costa rightly said, my name is Gerald Jamal Lemchi. I have few experience in the banking industry. I worked with Omnibank for 2 years. From there, I transitioned into investment advisory services with some few finance houses. And then I've got some experience also working with some telcos in Ghana. Currently, I'm the regional director for PayMob. My focus is on expanding our business operations in Asia and then in Africa, using Ghana as our local HQ to bridge the market and bring innovative merchant service solutions to the market in Africa. So yeah, that's just the little brief about me.
Thanks, guys, for the quick intro about your experience and your actual positioning. Today, all of us could see an appearance, at least if you like challenger banks like N26 or Starling or Revolut, even Monzo, they do offer, all of them offer kind of business banking. It's quite innovative and it's vibrant, but and honestly, I do have at least a few accounts by myself. I hold an account at Revolut Business. I have Holvi, the Finland fintech. Also, I have Starling bank account, both personal and business one. TransferWise, and a couple of crypto-oriented kind of banks with a physical card. All of them are presenting and promoting kind of innovative features. But how do you think? What is the most attractive? What is the most catching eye feature you can distinguish from, let's say, the most vibrant banks? I mean, today's banks that offering their modern services to small businesses. Gerald.
Okay, so it's quite interesting. Quite recently, you notice most banks are kind of moving away from the traditional brick and mortar banking system, and they are looking at expanding their territories and bringing more customer convenient services to their customers. That's point number one. In maintaining the old style of doing business for most banks, they're also looking out for alternative ways of generating revenue, not just the revenue, but also bringing value for their customers. Now, quite recently, what's happening now is you find most banks trying to turn their own customers into customers who generate revenues for them and then they share. Now, this is the future of what banking means. Whilst they are focused on investing and getting money in terms of interest on their facilities, they are trying to use each customer who has a bank account with them as an agent, sort of, to sell their own product. And this is where the fintech companies come in, because banks, by their nature, they are very huge and they are unable to innovate fast because of their size. Okay, so the fintech comes in to bridge the gap, use your small scale, and then think of innovative ways of ensuring that these big banks who are so big and they have the money can bring up innovative solutions to serve their customers and also generate some revenues from them. If you're a bank today and you are not thinking along these lines, I bet you'll be out of business soon.
Yeah, maybe you will be definitely soon out of business. But from your personal experience, what have you met as the most beautiful, the most attractive feature for today's digital banking apps for small businesses? What's the most crucial, like maybe fast payments, maybe payment acceptance, maybe free of charge transactions? What's the most promising feature of today's digital banks?
Okay, so it's interesting to know that unlike previous times where banks will charge cost of holding accounts, okay, now they are trying to reward their clients to hold more funds, okay, and they are trying to reward their clients for using most of the online portals to do payments seamlessly, and they are trying to reward their clients. So recently, you notice some banks have their own e-commerce portal where they aggregate a lot of services, and then they encourage their customers to shop or do business from those online portals, and they will give them so much in terms of rewards. This is where the future is moving, and especially for Africa, where the financial inclusion strategies at the entry level, okay, and the banks are not left alone in this. You can see a lot of telcos also playing a huge role in this with the introduction of mobile money. Okay, so there is like a tripartite arrangement between the banks and then the telcos and then the fintechs, and they are coming together to collaborate and bring something good to merchants. And this is very interesting. I think alongside deep into the conversation, I'll give you certain scenarios of how some fintechs, including myself, PayMob in Ghana, and then some banks and then the telcos, we are coming together to form a certain business model that will bring value not just to the banks, not just to the telcos, but also to the merchants and customers.
I see. Yeah, it's interesting, definitely. David, what could you distinguish as the most attractive features from today's banks?
Well, the first thing I'm going to question is what you called a bank, because you started off that conversation by you say you had a bank account with Revolut. Well, Revolut's not a bank. Let's get that out for a fact. They may be a bank challenger, but they're not a challenger bank. So let's first of all be clear what we're talking about here. Either bank challengers or challenger banks, because one are in Europe money regulated and one are banking regulation. And that affects the services they can offer, the functionality they can offer, and everything else. Now, in many countries in Africa, that's not quite so specifically defined because they don't have e-money regulation, although that is now rolling out to the Middle East and the UAE. Kenya's rolling it out. Nigeria now has 4 or 5 different, I think 4 different types of banking regulation and levels you can be. So I think the first thing is to understand is who we're talking about here. In terms of when you say, you know, what features and functionality, it differs based on what their regulatory status is. So there's no good putting Revolut in there and saying what's the best bank. Effectively, you're saying a pear is the best apple to eat. It's not a bank. End of story. Today, their customers therefore don't have a banking relationship. The first thing I think then when you talk about what a bank's doing, and I'll give you some examples. With one of my companies, we went to open up a bank account at Barclays in the UK, who promptly, after 2 weeks of talking to them, turned around and said, well, actually, you don't have enough money in the bank and you don't have enough customers. So we're not going to back you. By the way, MasterCard backed that company with several million. It was in the public domain. So Barclays aren't a very good judge of business, I'd claim. Another one of my clients wanted to open up a business bank account with Starling Bank, and got told because of the way we're structured with a lot of shareholders, we don't in the UK have what's called a person of significant control, i.e. over 25%. Starling said, nothing about your business, but we can't handle you. You're far too complex for us. So what we've got to recognize is that a lot of these digital banks out there are actually basically offering quasi-consumer propositions today. They either can't handle anyone that's slightly unusual, which is what business is about, and secondly is they don't understand the difference a lot of the times between the different types of businesses out there and what they need. So for a starting point, you've got a range of digital banks out there now looking to supply what I would call round pegs and round holes. In other words, they're a round hole and they're looking for round pegs. So one of the key difference they're going to do is if you try and open up a business bank account at Barclays, at Lloyds, or any of these guys, it will take you on average 2 to 4 weeks. I see Alpesh is online, one of the founders of Soldo. It takes 15-20 minutes maximum to do it on that. Some of these will be regulated as banks, and some of them will be regulated as e-money institutions. But we've got to think about, why do you become a bank? As Monzo said to me on stage 2 years ago, if we'd have known what we knew now, we'd never have become a bank. Because actually, the only reason you need to become a bank in Europe is to take in deposits to lend. Pretty much every other bit of functionality other than the protected funds, and that's handled differently through safeguarding, you don't need to be a bank for. So most of the solutions you're talking about here don't actually need a banking license to offer bank type services. So then your real question was, what was the attractive features needed by these new challenger banks in the market? Well, I would argue there are certain hygiene factors. It's not about attractive features, it's about hygiene factors. Hygiene factor number one, you get me open within, I would argue, a couple of hours maximum. Number two, you have an app that's intuitive and easy to use. Number three, if you're in Africa, you need to talk about acceptance solutions. Whether that's QR or something else, there's no point giving me a business digital bank account if I've got no way of getting funds into that account. I need a digital acceptance solution that's also widely accepted in that market, whether that's MPQR, whether that's M-Pesa, or whether that's a host of the others out in the market. So you've got to have the right integrations. And finally, I need a method of paying things. Well, that means you need card, but it also means you need access to the local bank accounts. So that means you need access to a local switch in some of those markets or in Europe. Yeah, we call it SEPA or faster payments, but in Africa, it often is a national switch. You need access to that national switch to enable payments into the banking network. Now, those to me are hygiene factors to be a real challenger bank or a bank challenger. It's not about what's the best feature. Without those, you're not really in the starting blocks. Gerald, would you agree?
Absolutely, absolutely.
David, yeah, and I totally agree with you because when I started exploring licenses, different levels of licenses here in the UK for my payment initiative, I found to accept payments and provide merchant services, you don't need to be to hold a full banking license. Either you could just go with electronic money license or payment institution permission from the FCA. And as soon as you could obtain a, let's say, an authorized e-money institutional license by the FCA, you definitely can receive deposits, you can open like accounts, you can do definitely a variety of things to your business and individual customers here in the UK. A friend of mine's company, they do remittance services. They are exactly licensed as a e-money institution here in the UK and in some African countries. And by this license, they fully covered to provide all services they provide. It's really beautiful. That's why I definitely decided to settle a couple of fintechs here in the UK. Gerald, in related to what David said about Africa and local payment switches, could you please add a little bit more kind of innovative solutions or sustainable solutions presented in the region? Like I heard about the fingerprint confirmation for those merchants who are lacking with the internet.
Yeah. Okay, so what currently is happening in Ghana, which is mostly the ideal case I normally like to start with, is the fingerprint payment verification for payment. Okay, so the local switch, which is GH-Link through GIPS, they came up with a means for people to authenticate their payment using just their fingerprint. Now, for any fintech, previously, before you play a part in this ecosystem, you didn't need any license. Okay, but now there is a new regulation from the central bank that requires all fintechs to come for a certain license depending on your activity. The license explains or groups all fintechs into categories, okay? Then you are attached to a bank through which you are able to give people the means to do payment, okay? If you have a GH-Link card, you can use your card anywhere at the filling station or at the mobile money operator or at the restaurant. But then instead of entering your PIN to confirm the payment, you use your fingerprint. So Parker had hit the hammer right on the nail by saying that if you want to venture into some of these spaces in Africa, that the situation is not the same as in Europe. You would have to, of course, go through the national switch and sometimes go through the central bank. Costa?
Got it. Got it. Thanks for this, David. Let me get back to you with the question. Your three pillars in terms of rapid account opening, nice app, and access to local payment systems like Target2, SEPA, Swift, etc., etc. You mentioned probably lead all of us to growth points for the banking for the future. Could you please emphasize a little bit more about this and elaborate your points? What exactly could be growth points for the bank for the future from your point of view?
Well, let's be first clear again. Bank is a very broad term. So if we take someone like Clearbank, they're a wholesale bank. If we look at others out there, such as Banking Circle, again, a type of wholesale bank, almost. You know, when we talk about growth in banking and the future of banking, let us not be so naive as to assume that a bank is a bank. It's, you know, again, I'm going to come back to my favorite thing of apples. There are cooking apples, there are eating apples, there are apples that taste like pineapples even. Okay, there are lots of different types of apples out there, and there are lots of different types of banks out there. And there are lots of organizations that don't need to be banks to offer banking services. Take 3S Money, for instance, who specialize in moving money around the world for the mid-market players. It's a market that's too small for the big corporate bankers and too large for the commodity base, you know, basic square hole, square round ones, TransferWise, etc. Revolut. So there are many different types of either banks or banking organizations which have got strong growth in their own unique niche area. So there's no generic, oh gosh, this is going to be the bank of the future and this is what's going to grow. Because in each area, there are different types of banks meeting different, and it comes back, I'm going to say, to my marketing background. What's the proposition? What's the customer need? And will they use it? And it really is that simple. And therefore, in terms of what the fundamentals are for growth, it's really, really easy. Who's your target audience? What's your proposition? And what do they need? What services do they need that you can deliver? And you're delivering them better, cheaper, or easier.
Yeah, got it.
Banking services haven't changed. You know, we talk about banking, but core banking services haven't changed now for hundreds of years. You might have changed slightly in how you access them, whether it's through an app versus going into your local branch. But ultimately, banking services are about moving money around the place. It could be either locally or nationally. It's about enabling you to pay, storing money, sending money, that type of stuff, and lending you money. You know, those core banking services haven't changed for hundreds of years, not since Shakespeare wrote, you know, Merchant of Venice. So when we say, where's the growth going to come? It's wrong to say, oh, so-and-so's got something brainly, amazingly new. They're not amazingly new. It's just a different proposition, a different way of positioning things for a different particular target audience that's meeting their needs. There is no magic growth factor there.
I see, but if we would like to focus on, let's say, a very common, very basic banking services, as you mentioned, storing money, opening accounts, accessing and managing your deposits, your funds, access to payments, again, payment acceptance for these very basic services without focusing on quite niche areas like this bank only for, I don't know, for merchants, this bank only for foreigners, etc., etc. Because many of these fintechs actually are applying artificial intelligence, machine learning, and also there is an appearance for open banking and PSD2 directive in Europe. What do you think could be really growth factors for those fintechs who are offering, including like very basic services?
And I'm sorry, I'm going to push back on that. So if you want some examples, Monzo Bank, which you quoted earlier, Monzo Bank has had a real challenge in that it announced, I think, in the press or somewhere, I thought I remember, that 30% of their loads were now salary based. I know other ones that are more payroll and orientated that are already getting 70-80% of salary loads in there. So, I'm sorry, all of these banks have their own niches. Okay, Monzo these days on their latest accounts and based on what they've done, it's cost them £62 a customer. £62 a customer to acquire. On the other hand, Starling Bank, who hasn't got 4 million customers, but has customers in hundreds of thousands, is announcing that by next year they'll be breaking even. So, when you talk about growth, do you mean growth in revenue or growth in customer numbers? Because Monzo has taken the customer number route, Starling has taken the profitability route. And Revolut, on the other hand, they've announced huge challenges as they've seen their revenues drop off because, of course, no one's traveling at the moment, which is where a huge portion of their revenues came from. So, just saying, what do you see as the growth factors, the magic bullet? There isn't one. It's what do your customers want? Who is the customer target audience? And what needs are you meeting? And why are you meeting it better than what's in the market today? And that generally means, is it cheaper, quicker, or better than what's in the market today? If you look at all the services they're offering, none of these banks are offering anything that I'm going to call is revolutionary out there. None of them are offering something that is that much different. What they're doing is doing it better, cheaper, or quicker, or easier to access. So I would push back with you and say, when you say it's easy, what's the general growth factor? And I would ask Gerald, in Africa, I will still contend this in Africa, there is no single magic bullet. We all know in every single country in Africa, there are different factors. That's why M-Pesa, who launched so successfully in Kenya, has ended up pulling out of 2 markets because they thought they could replicate it and they can't. True, Gerald?
Absolutely, absolutely. And Costa, just like Parker said, there is one point that still dominates, whether we like it or not. Until you are able to serve the needs of the customer, that growth won't come. That growth you think won't come. So one, Parker mentioned growth in terms of numbers with the clientele base. 2, revenue. What most banks, especially in Ghana, are doing, which very soon a team will be pushing for a continent-wide infrastructure to help integrations among the African countries more easier. For instance, if right now I want to pay Mob, want to operationalize activities in Nigeria, it means we would have to do a whole new investment through the Nigerian Central Bank to certify things, whereas this is not the case probably in UK, because once you are certified by the UK government, you can provide your services to other countries within the European Union. Okay, now, if your services are cheaper, they are innovative enough, they are faster for people to access, it means you are going to get the revenues in terms of money, and then you are going to get the numbers. Ask yourself, why weren't Ghanaians banking? I mean, why were the numbers for people who didn't have more bank accounts was more than people who had more bank accounts? So let's say there are about 30 million people in Ghana, and per the statistics, less than 10% of these numbers have bank accounts. It's because the banking procedure and the processes way back in the future was so complicated, was so it wasn't innovative, it wasn't appealing until recently where mobile money came. Everybody, per the statistics, there is about, let me check, 1.7 million direct mobile phone penetration in Africa. And almost every Ghanaian currently in Ghana has a mobile money wallet. Why? It's because it's convenient. I can access my funds, I can push my funds across, I can do anything without going to the bank and they asking me to fill any KYC, nothing. So the growth is going to come from you being able to know what the customer wants and doing it right there.
I see. Yeah, totally agree with you. David,
there's a question in from the audience, which I think
yes,
we should address, given my last comment. And the question is quite simple. Several questions. One is the Monzo Starling issue. Well, Monzo's gone for customer numbers, out and out for customer numbers. Monzo started off as an e-money company, and I would argue has become a card that in the old days we'd call them yuppies, young and upward profile people, but the city folk used to go on a Friday, Saturday night to go out and get pissed with on a Friday, Saturday night, and not worried if you lost the card. It wasn't people's main bank account, it was a secondary bank account. Starling's approach has been very different. It's been to develop its marketplace and APIs so that every app wants to link into it, because the quality of its customers are using it as their main bank account. So you've got a very different profile of usage and how they're using it. I'll let Gerald answer the M-Pesa question on why they pulled out, though. Why did M-Pesa pull out the countries? I have my views, but I would just simply ask that they didn't understand the markets, but you might have a better view on that.
Exactly. So instead of using the M-Pesa, I'm going to use a different company in Senegal called PayDunia.
Yep.
Okay. These guys are doing a fantastic job in Senegal. They are a fintech, and they are on their platform. They have Master Card, Visa, and others. Okay, their merchants and their customers are able to enjoy services on their platform. Okay, they tried to replicate the same thing in Ghana. It didn't work because in Senegal they didn't need any license to do this service. It was free. But in Ghana, the regulations are different. You need a license as a fintech from the central bank to operate in this market. And you would need a minimum of $400,000 to get a certain PSP license to do this service. Okay. Another company from Nigeria, which is Swifter, was in Ghana. They were operational until the new regulation came in, and they had to fold that. Currently, their operations aren't really working in Ghana. They are out. So for you to make it in Africa, you just have to understand how things work in the local market. And this is why we are calling for a continental-wide push for us to have one common integration infrastructure, so that once you plug into that switch, you are able to serve all other countries within the region. Costa.
Yeah, that's interesting. Guys, if you don't mind, after these questions, let me shift to the next topic to cover, to tell more. I have two points to say. I remember a few years ago, I met the founder of Revolut, Nick Stronsky. It was in Toronto, in Canada, many years ago. We attended the same Mastercard event. It called StartPath. Both of us, we were entrepreneurs, we were startuppers. We tried to deliver our message to a much bigger audience. That's how we became attendees at this Mastercard StartPath program, and went to Toronto for pitching at the front of local banks and investors, etc. At that day, when I first time met Nick, I wouldn't say he seemed to be a future unicorn owner. He tried to push his idea very hard. And today we see his very recognizable success. His project Revolut hit a unicorn valuation, etc. As well, we see Monzo, we see Starling, and all of these nice and attractive fintechs. But as the old saying says, when you read it on news, it's too late to invest. David, your I think you're very well connected and involved into today's startup industry and fintech area. Could you share your thoughts, your personal opinion? Who could be a good startups to put on a radar to look after, to who probably will become future unicorns?
And I'm going to push back against that, I'm afraid, again. Revolut losses double to 32.8 million on revenues of 58 million. So hang on, that's right. They lost 32 million on revenues of 58. Okay, so that means in really simple terms, they managed to lose £3 for every £5 they took in. Now, I don't know about anyone else out there, but to me, that ain't a very good business model. Okay, so when you say they've achieved unicorn status and they've got a real success out there, we have just seen Monzo do a major down round, a company that had huge numbers but huge losses. We have just seen Revolut about 6 months ago announced they'd raised 500 million, but now also start laying off people and everything else. My gut feel there is that Revolut can't access the numbers, can't access the funds they've raised because they can't meet the targets that were set as part of that raise. So let's be clear on what do you as an audience consider success? Because certainly I don't consider success having a unicorn status. What I consider to be a successful business is one that actually does something really crazy. It makes money. Real crazy, I know, but I do believe that ultimately, and we've seen this every time that times get hard, guess what? The companies that make money have a nasty habit. They live, they survive. The companies that have millions of customers but just lose money tend to actually have challenges. So pushing back on your very first point there, I don't consider unicorn to be anything to be particularly proud of when you're losing the amount of money they are losing, because basically all you're doing is spending VC money and basically hoping for the future that someone buys you. So, I've got a small company. I mentioned it once already. I sit on the board of a small company called 3S Money. Okay. It got its e-money license, 18 months ago. It makes money. It's very niche. Is it going to be a unicorn? I doubt it. Is it going to be a nice, strongly profitable company in the hundreds of millions? Damn right it is. Okay. These are companies that they don't set out with saying we want to be a unicorn. What they set out with is a different aim. We want to be profitable. We want to make money. And to me, business is about making profits. Now, if you're going to tell me they've got unicorn status and they make profits, hey, very interesting. So what companies are particularly out there that are going to deliver on that? There are a few, I think, around the AI machine learning space. But, there are a few around, but I think what you're going to see more of is companies that are quite happy not being unicorn, but actually being anywhere between 200 million and 700 million in size, but making good returns and profits. Do you know what? They'll sell for a hell of a lot more money. Gerald?
Right. Well, this particular point is quite an interesting one. Depending on how you look at it, it's quite interesting. Okay, so for the Ghanaian market, we have ZPay trying to do something amazing. Yes, they are not there yet, but then they are making the money. And of course, if you are going to get the numbers, like Parker rightly said, we are just going to get the numbers, a lot of people on your platform, and then the patronage isn't high. You are not breaking even, you are not making profit. Then why be in business in the first place? On top of my head, for Africa, I can state some few companies that seem a little promising in the fintech space. You can look at Flutterwave, you can look at Paystack, and then you can look at ZPay. But then again, these guys are still restricted within their jurisdiction. Like, they are unable to move beyond the boundary of where they operate. David mentioned M-Pesa. They tried to move beyond, and then it wouldn't work because they don't understand the market. And Africa is so dynamic. Like each country, even within the same country, there's huge cultural difference. There's huge demographic difference. There's huge different understanding of what ought and what is.
Gerald, you missed out from your list Jumia. I have to jump in there. You missed out Jumia. Jumia to me is probably one of the fastest, most exciting companies in Africa.
Yes, there is Jumia.
Jumia
is good. Yeah, Jumia.
They don't need any regulation. That's why I love it.
Yes, because of how they are operating, and they have strong collaborations with some banks. Okay, Jumia is in Nigeria, Jumia is in Ghana, and so far I can tell you they are like the biggest guys in the space. So yes, you need to understand the market, and there's this similarity between Ghana and Nigeria that makes once you succeed in Ghana, once you succeed in Nigeria, then it means you've muscled up to scale up in other parts of Africa. I don't know why it is so, but then it seemed to be happening. Yeah. So Jumia.
I would also add in there in terms of what's going on. I think in Africa. I mean, Jumia, I think it is a really exciting area of what they're doing in terms of delivery. And I think the other one is Channel VAS. Is another company that is already huge and is using your mobile telephone billing records in order to lend money. Now, you know, in a continent where basically credit scoring does not exist in a national basis, they have found a way to do micro lending based on your mobile phone lending records. Look them up, Channel VAS, an amazing company, growing fast, and huge reach, and you know, things like that. They're providing capabilities, and they partner, and they do all sorts of things. But Channel VAS is one that, again, is growing hugely in Africa and doing very exciting things because they're hitting a problem. The problem is consumers can't get credit because there's no credit bureau. Answer, find a way of credit scoring them which doesn't use a credit bureau. So I have to say things like that are just growing hugely. You agree, Gerald?
I do. The only way to make money in Africa is to try to solve a problem. If you are not, you are out of the game.
Yeah, and I totally agree with both of you, especially in terms of Africa and access to scoring engines and scoring data and credit histories, because for many countries there is no this similar data. And on my own way, I met at least two companies, one from Nigeria, the second one is from Kenya. Both of them are targeting groups of people for like micro or emerging loans that people could download a mobile app. The app analyzes their phone. Also, they connected with their Instagram, with their Facebook, performing a scoring, even for some of cases without accessing data from the mobile provider or mobile wallet, etc., just scoring their social networks. And based on these, they are able to provide an immediate loan. It's not huge indeed. It could be, let's say, $5-10, but the Kenyan company, they are able to lend up to $200 or $300 American to the first timers. It's really a challenger.
Nice.
No, definitely would agree with you on that. And I think it's interesting as well that when you look back here, and one of the audience questions is about the wealth side and the mass affluent side. And actually, I do believe there's an opportunity, and we've seen this with Revolut, with Monzo, all trying to introduce what I call premium accounts. But in Africa, we're seeing likewise. You know, these companies are gathering huge numbers of main consumers, and they're realizing, yes, they're lending to some of them, but as they start lending to them, some of these people are also looking for savings and other types of services. So we're seeing the middle classes in Africa grow at a faster rate probably than anywhere else in the world, other than some of the developed countries in Asia. And when you've got a fast growing middle class, you have a fast growing aspirational class that is ideally suited to these type of more premium oriented products. So whether it's in Europe or whether it's in Africa, you actually have a very similar requirement. It's just the products you need to deliver on that proposition are very different for the two markets.
Yeah,
That's true. Guys, if you don't mind, I would like to go to the last question, to the last topic we have to cover for today's webinar is about payment methods, because I read many articles about QR payments like WeChat and Alipay QR payments, including very specific, very local payment systems and payment schemes, like Polish payment system called Blink that based on just small codes. I'd like to pass a word to Gerald to explain to the audience what he sees as the future for payments, for payment acceptance, for making payments.
okay. Thank you, Costa. This topic actually seemed to be a rather complex one. Okay. And again, I would like to share the African experience and what's happening. We here in Africa, we have a lot of expat community coming in because of trade. So people come in from China, from let's say Asia, they want to use their Alipay if it's possible, but then the infrastructure doesn't exist. Okay. You are able to use your Visa and Master and Maestro and American Express because that infrastructure exists. Okay. Now QR code is coming up. Mobile money is like out of the roof. It's because the locals can relate to it and they've accepted it. But then again, that's not enough to create an environment for a more universal forms of payment. You need something more robust, and that's where we come in as PayMob. We have this solution, which we call the merchant service solution, that integrates a host of payment schemes like Visa, Master, Alipay, China Union Pay, Apple Pay, Samsung Pay, and then we keep integrating more. So in Ghana, there is eSwitch and then GH-Link, which we are trying to integrate. We've tried to integrate all the mobile money platforms. Why are we doing this? We want to bring to the bank or the merchant service provider a cocktail of all means of payment, including cash, on a POS machine or on a soft POS, which turns an Android smartphone into a POS machine to accept payment, and also to bring value to the holder of the POS machine or the smartphone. So for a merchant who owns one of these POS machines, he or she can sell their products right from the POS terminal without needing a huge computer with a different printer with it's outmoded. We are going beyond that. And this is where the future is going to be for payments in the future. One device that can accept all forms of payment, either tap on phone, either inserting, either swiping, either reading QR codes, either by your phone or by a certain chip in your neck. Yes, this is where the future is. And then the rates should be friendly, not 5% in other places, not 3% in other places. And this is where we come in.
Thank you, Gerald.
I'd like to add to what you said, Gerald, about Africa. It's quite interesting. I think that what we're going to see is regions going down certain routes, particularly the Francophone markets, who are always close anyway. I think, Kenya and its neighbors as a hub, and Nigeria and its hub. Interswitch is obviously trying to get Verve out there strongly as the Pan-African payment network. And we're seeing MasterCard trying to roll out MPQR in a number of markets. I think what we end up with, though, still is quite a lot of local or very regional payment solutions, which may well be relatively cheap, let's say between 0.5% and 1.5% on merchant service discount or charge. And then I think you're going to get much more around cross-border issues. And you're going to have the Visa, the MasterCard, the Union Pay, Verve is trying, as I said, where the fees will be higher, 2.5% to 3.5%. But what they'll be concentrating on is that cross-border side of things and offering that out to the customer base. So I think we are going to see very differences between local payments and cross-border payments in Africa. And that's where I think as smartphones roll out more and more strongly, actually, I think there's also going to be bigger and bigger issues with Apple. Apple doesn't have a big penetration now, and I think its penetration will actually reduce because of things like PIN on glass. PIN on glass is being rolled out now in a number of markets. That means you put the PIN number actually in on your phone glass. You don't need a separate little unit that attaches. Apple, that's very hard to do with, given their restrictions and everything else. So Android, that is already dominant in Africa, I think is going to become even more dominant as retailers move to doing PIN on glass for these type of payments, as well as accepting all the other things. So yes, the acquirers and the partners that can accept both international and national solutions are going to be the winners on that. In Europe, I think it's very different. Alipay have announced they want to have 10 million merchants in the next 5 years accepting their QR codes. I think dream on is my answer to that. I just don't think it's going to happen, certainly not in the physical stores. Alipay will continue to be accepted where it is now, at stores that the Chinese go into. If you have a large Chinese customer base, then you're probably already accepting Alipay and WeChat and things like that. If you're not, I don't believe that you will suddenly have huge acceptance for that sort of solution over in those markets, as does Union Pay at the moment, is still very pushing on acceptance in that part of, in that perspective. And whether it's QR or contactless, I'd answer that by saying this: in any market that contactless is established, I don't see QR having a major play. But in any market where contactless is not well established, I believe QR will make a major play. And I'm happy to be proved wrong over that over the next few years, but I do believe that's what we'll end up seeing.
I see. Yeah, definitely. And totally agree with David, with you in terms of QR payments, because I used to travel to Asian countries many times, especially to China. I traveled often last year, and I found how rapid these QR payments are. Even for my own personal WeChat account, I got this money feature connected. And
yes, but you can't open up an Alipay account unless you live in China, and that's the challenge.
This is the challenge. But if you have a WeChat account, you can link even your European card. Is because my actual WeChat account, let's call it so, has linked with my Monzo card issued in the UK, and it works. It works like Samsung Pay or Apple Pay as a proxy to my real card. That's how it worked. That's why I totally agree with you in terms of QR payments and this feature. And thanks, Gerald, for an explanation of your approach how to accept payments for small merchants and micro merchants. I think it will be useful for at least 2 people we have attending this meeting who I met in person many times. I would like to thank you, our audience, people who were attending and who was watching the webinar. Thank you, Gerald. Thank you, David, for helping me to hold webinar and your opinion, your thoughts. We've got a few questions. I don't think we have enough time to answer them right now. We will forward the questions to our speakers and we'll reply via email. Thank you, guys. Have a good day. Have a good week. See you next time.
Before you go, I just want to say one more thing. All our viewers are advised to go see our Smart POS, our PIN on glass solution. Just go to the PayMob website and you have a feel of the features and the amazing innovation that we brought to the market, guys. Thanks.
Thank you.